What is going on, traders? Haven't talked to you guys since the FOMC live stream, which was kind of crazy because I was having internet issues. That's neither here nor there. In this video, I'm going to be giving you a market update. So post FOMC, the S&P 500 basically did exactly what I thought it would do, which was get to that 430 level. And we are now at the support resistance flip area where this was previous resistance. Now it is acting as temporary support. Of course, we've seen this before, and it doesn't mean that the support has to hold. We do have a couple of key pieces of data points to come out, which is basically the PCE, as well as initial jobless claims. We have that as well. And then we're going to be kicking off earnings season in October, which is important. So here's what I think the market is going to do. And then we also have to look at the dollar. The dollar index has finally hit a golden cross for the first time since 2021. And that essentially is one of the factors that led us to have a hell of a time in 2022. And I say that facetiously. Of course, the market crashed in 2022. And we are seeing now a golden cross on the dollar. Again, obviously a strong dollar is not good for stocks. However, here's why I think the stock market can actually continue to drop a little bit past September. As I told you guys, August and September would likely be down months. August was a down month. September currently is a down month. But why I think that can extend a little bit into October, it's because we have earnings coming up. So earnings are coming up in October, and that is really going to be what economists are going to look for, what analysts are going to look for, is whether Q2 of 2023 was the actual trough in earnings and whether we go back up from there, right? But if Q3 2023 is actually worse than Q2 2023, then I think that can continue to extend the market downfall through the end of the year. Although I do think on its face that for the rest of 2023, it is likely that we can hit all-time highs, but I think that we have to monitor what happens with earnings. And so since this is a very pivotal earnings, I could see the market actually continuing its slow decline into October until at least earnings for mega caps are released. So we will continue to monitor that. Now, if we do see a decline, we're basically forming this head and shoulders here on the SPY around the 430 level. And if we do continue to see a decline, where do I think we can go? Well, if you look at the volume profile, you could see, and if you just look at the price action alone as well as the volume profile, you can see that we have a clear level between 405 and 415 for the SPY. I will be a heavy buyer on the SPY if we get to that level. I do think you could dollar cost average here at around 430. We're about 10% down from all-time highs. But I do think that 405 to 415 level will provide a really solid buy-in point if we can get there, if the S&P 500 actually gets there. Plus, if you measure the head and shoulders neckline from the head to the neckline, it's about another 4% drop. So if you take that from where the neckline is currently down 4%, you get to around that level, that 405 to 415 level on the S&P 500. And in terms of how I'm playing this, because I always get asked, we did close out our credit call spread on the SPY for 100% profit. And I do also have cover calls on the SPY right now that are up 94%. Basically, I'm going to close them out today right after the recording of this video, and will likely open up new positions. I am making some strategic buys, as I tend to do if September is a down month. I do take a look at some of the mega caps that I like and see if they are at a buy point that I agree with. So I sent out an alert for that today as well. If you guys want access to all of my options plays, all of my day trades, link is in the description below. You'll know what I'm buying, you'll know what options plays I'm making, and you'll know the day trades that me and the other analysts are doing. One of our analysts hit an overnight trade. I think it was $1,500 per contract, which was crazy. So you definitely want to join if you want to get the most up-to-date information on the market and join the most versatile group online. In my opinion, we trade it all. Now, lastly, I will leave you with this. In terms of what the expectations are, in terms of the Fed funds rate. And this is one of the reasons that the market sold off, as I suspected it would sell off. But we got the dot plot, and the dot plot basically is just where the Fed members see the federal funds rate going. And the market was hoping that because of some of the data that were coming in, they were hoping that the Fed members would actually be a little more dovish and not see a rate hike later this year. However, most Fed members still penciled in a rate hike for later this year. And for next year, they only see one cut of 25 basis points. So the market was hoping that the Fed would have no more rate hikes this year and would have at least a 50 basis point cut next year. But we are seeing one more rate hike this year, maybe in November, maybe in December, and then only a 25 basis point cut next year. Now, here's why the market doesn't believe the Fed, because if you take a look at the Fed Watch tool, which is basically how the federal funds traders are betting, you could see that the federal funds traders are overwhelmingly thinking that that was the last rate hike that the Fed will ever do, which was in July, I believe. So they are not pricing in a rate hike for November or December. So there's a discrepancy between the traders and between the Fed, because the Fed, in my view, has completely lost credibility at this point. And, traders are thinking that the Fed is talking tough to try to elevate rates, which is actually happening. If you take a look at the 10-year, it's the highest that it's been since 2007. But the federal funds traders are not believing the Fed right now. So the Fed is saying one more rate hike. Federal funds traders are saying that's it, no more rate hikes. And you guys know that I do have a monster play in the works that I have loaded up. In my opinion, it will be a monster play. It is really for next year when the Fed actually starts cutting. And that is regarding the Treasury futures. When the Fed cuts, when the Fed makes its first cut, that is when we tend to see the Treasury futures actually skyrocket, particularly the 2-year Treasury futures skyrocket. And remember, there will come a time in which the 10-year will surpass the 2-year in terms of yield, which means that the 2-year yield is going to tank and the 2-year treasuries are going to actually rally. So I can't wait for that to happen. And that is still in the works. I have not opened up that play yet. In my view, it is still really, really, really early. So I'm not doing that just yet, but when I do it, I will announce it to the Discord. Anyway, traders, hope you guys enjoyed this market update. As you guys see, I'm still in Rome. Look at this beautiful palm tree here. But I will be back in the US this week. Cannot wait. We are kicking off Mastermind 2.0 October 2nd. I have a very, 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 very special surprise. Jared Tendler, who wrote, in my opinion, the greatest trading psychology book of all time, The Mental Game of Trading, is going to be joining us on the Discord, giving us a very, very generous hour of his time. So if you guys want access to Mastermind 2.0, which gives you lifetime access to the Discord, lifetime access to the trades, lifetime access to the chats, it gives you access to all of the courses, all of the ones recorded, all of the ones upcoming, and every single mastermind to come, as well as every single mastermind recording in the past, plus this bonus lesson with Jared Tendler. Link is in the description below. Make sure that you get your name on the waitlist and apply. Once the waitlist fills up, that's it. We won't take any more applications until the next time we open up the mastermind application process. And again, if you want access to just the trades and the alerts, that link is in the description below as well. Come join us, see what the group is all about. Anyway, hope you guys enjoyed this. Let me know what you think below. Are we going to go lower this year? Is this the bottom for this year? Do you guys think that we'll actually hit a market crash once again, as a lot of FinTwit seems to think? Let me know in the comment section below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.